As risky assets recovered on Friday, the safe haven US dollar retraced earlier gains made following the better-than-expected monthly US employment data. The US regained 1.4 million jobs in August, and the unemployment rate posted a surprisingly large fall to 8.4% from 10.2%, marking a fourth straight decline. The US dollar index, that is used to track the greenback against major global currency peers, posted a 0.2% rise on Friday to end at 92.97. For the week, the DXY gained 0.65%. The US Federal Reserve Chair Jerome Powell on Friday said the jobs report for August was a good one, but reiterated the central bank will keep monetary policy ultra-accommodative for years to support recovery from the coronavirus crisis and recession. Investors see a downward trajectory for the US dollar in the longer term. The US dollar's downtrend would continue for at least another 3 months due to the outlook for the Fed's monetary policy, economists say. Meanwhile, the decline in the greenback at the start of the past week pushed the euro above the key $1.20 level for the first time since 2018. However, those gains quickly faded after European Central Bank chief economist Philip Lane said the euro-dollar exchange rate does matter for monetary policy, suggesting the single currency's rise had come too fast and strong for the ECB. The euro ended the week at 1.1838 on Friday, posting a 0.5% weekly fall. According to analysts, the focus is going to be on what happens at the ECB meeting this week. If the euro's rally is mentioned in the central bank's official statement, it is likely to have a major impact on foreign exchange markets. In the meantime, the British pound surged to new 2020 highs amid dollar weakness, but dropped quickly down. Sterling was falling for 3 days in a row up to Friday to close at 1.3276, notching a week-on-week decline of 0.5%, its first weekly loss in a month. Experts warned that any potential recovery will be restrained by the growing threat of a no-deal Brexit. The pound's recent rally was partly supported by the UK government's success in preventing a second wave of the coronavirus so far, but fears that the virus will return are likely to persist. Elsewhere in the crypto market, BTC mostly traded in the red last week, though slightly rebounding on Sunday. However, that did not help the crypto king erase losses, so it posted an 11.8% slump for the week to end at 10,349 points. It appears there's a lot of selling activity. It's likely that after reaching $12,000, Bitcoin inspired a lot of people to sell their stashes, or at least part of their stashes, which could be the driver of a sudden drop into the $9,000 range. However, analysts say Bitcoin's fall is not such a bad thing. Some are even claiming that the price drop is necessary for it to remain strong in the coming months. Meanwhile, in commodities, oil prices were under pressure from falling equities and demand fears. Thus, Brent crude fell by 3.2% on Friday to settle at $42.66 a barrel, posting a 5.3% fall for the week. Meantime, WTI crude fell by 3.8% on Friday to settle at $39.77 a barrel. For the week, the U.S. crude oil futures logged a 7.4% loss. Meanwhile, December gold futures fell by 0.2% on Friday to settle at $1,934.30 an ounce, the lowest finish for the most active contract since August 27. On a weekly basis, the yellow metal shed 2.06%. Analysts say that Fed's super accommodative stance will keep gold prices supported at lower levels. You've watched the combined review of financial markets with me, Anna Kasatkina. We wish you profitable deals and stay tuned.